I made $10,000 on a gold trade this week, and I'm going to be walking you through the trade breakdown. In this video, what I want you to focus on is not the profit, not the $10,000 that was made, but the thought process, the psychology behind the trade, and the reason for me executing the overall trade. Because at the end of the day, that is the most important aspect of trading, the performance aspect, and being able to follow a consistent process over and over and over again. Let's waste no time. Let's jump right into the video. So going over to the trade breakdown, guys, what we can see here on my trading journal is that this was a long trade that was executed on gold. The overall profit was $10,815. My contract or lot size, 15 lots. And yeah, the trade overall risk to reward was 3-1. And as always, my broker of choice is Ankle Trade. They are very good, very reliable with low spread, free withdrawals, great leverage, and most importantly for me, overall great customer service. You need to know that when you invest your money in a broker, they're going to respond to you if anything goes down, and so far they've proven to be that. So for more information, you can check the link in my description. Let's go over to TradingView for the actual trade breakdown. So going over to the high time frame here on gold, the very first thing, guys, when you are taking or you're executing your trade is you always want to start from the high time frame. You want to get some confluences or some of the reasons why, hey, you should be either going short or going long. This particular day, there were a wide variety of reasons why I wanted to be a buyer, but one of the main reasons was as we went to the week, Monday, September 4th, September 5th, and September 6th, we had pretty strong bearish momentum. Overall, gold long term, I still believe that we still could see some overall bearish decline, as we can see here that the institutional flow is to the downside. So this was a little bit of a reversal play, a reversal trade, and I had some things that gave me stronger confluence. As we go over to the 4-hour time frame, we're going to gain a better or a clearer picture. So start of the week, we started to see gold prices dip down and just fall. This level was a pretty significant level that I had mapped out even before this trade was executed. Why? Because if you look to the left here, you can see that it is a very powerful support level or supply and demand level where, price in the past had pushed up significantly. And you can see that with the candlestick. So every time price hit this level, or when price hit this level in the past, an influx of liquidity came into the market. So my expectation was simply no different. And the main thing as I started to, get ready to execute this trade was I like to wait for the bearish momentum to essentially leave the market, right? If we are in a buyer's market, or let's say we're in a seller's market, you want to wait for the bearish momentum to die. And what I started to observe in this trade is on September 6th, which was the Wednesday, the day before I took this trade, I took this trade on Thursday, we saw price pretty much melt, hit this level, and we literally pulled back. The next 4-hour candle, price traded back into this level and failed to close below this level, or failed to move even lower. And for 20 hours, we essentially played in this level. So that told me, Emmanuel, sellers are literally losing steam in this market. So if we go over to the 1-hour time frame, we can kind of see what happened next. So the play on this particular trade was to wait for unemployment claim to come out at 8:30, because I executed this trade after the news. I'm not a big believer in trading the news. And when I say trading the news, I mean, taking a trade right when the news comes out. I believe in waiting for the dust to settle and then gaining a larger perspective and then executing your trade. So what we see here is accumulation, right? We're seeing accumulation at a critical level, and we've seen huge selling pressure come into the market at a level of support or supply and demand, and price started to accumulate. So for me, simple, easy. I talk a lot about accumulation and distribution. What I wait for is for price to break out of that accumulation. And what price did at about 7 to 8:30 was it broke out of this accumulation, and 8:30 we saw the news come in and drive price lower. If we go over to the 15-minute time frame, we might be able to gain a larger picture of this play here. So at about 8:30, we saw price started dipping further down, and the trade was executed at about 8:45 after, I saw that, hey, the market has dipped, and now we're likely going to be seeing price move to the upside. So I waited for the dust to settle, and I also trusted my strategy, and I was patient enough to not get excited, because what happened here with this particular in this particular day is because the market had been bearish for Monday, Tuesday, Wednesday, a lot of traders sold because it's been easy money. It's been easy pickings. If you were a seller at the beginning of the week, you made a lot of money. So the market sometimes understands the psychology that a lot of people have when it comes to trading. So a lot of people were shorting as the news was coming out with the same expectations that they had the 3 previous days. And as a trader, my job is to observe. My job is to wait for clear confirmation. So what I simply did was just wait for some confluence on the 1-minute time frame and on the 5-minute time frame. If we go over to the 5-minute time frame, we can kind of see that, hey, price started to push down significantly at about 8:30, and what we see here at 8:35, momentum, the bearish momentum started to die. 8:40, we started to see an influx of buys coming in. And once I saw that, it was okay. You know what? This to me is worth the risk. Minimize my stop loss, because if price is going to continue lower and price takes out this low, there's a strong possibility that the market is just going to continue moving down. So what I did was I just, put my order in and, watch the market play out. So when this trade was playing out, guys, my overall focus was to maintain my composure as a trader, to just stay focused on my psychology, because at this point in time, when you take a trade, you have to factor in that the only thing that matters is you following your trade plan. Winning or losing is not important. If you execute your trade plan and you win, that's a good day. If you execute your trade plan and you lose, it's still a good day, because you followed your trade plan. That's the process. And that's, what I want you to understand, because the mental aspect of trading, guys, is really, really critical. And as a trader, performance is everything. If you can't focus on the performing aspect of trading, it's going to be hard for you to reach or deal with the stresses that come with trading. And for a lot of traders, if you might not follow your trade plan and make money, that's a bad day for me, right? If I didn't follow my trade plan and I made money, I'm really hesitant to show up the next day, because I know that you do that enough, what that will do is reinforce negative habits, negative behaviors, right? You maybe over leverage your account and boom, you made a lot of profit. Okay, you're gonna do it again, right? So a lot of those things I try to not focus on. So for me personally, a lot of the things that I focus on is just the performance aspect of trading, focusing on executing and executing and executing. And as we can see here, the trade essentially took out the high. And when a high is taken out from the market, that is a liquidity, an area of liquidity that has been tapped. So what happens is, profits are taken from the market. Buyers take their profits, and we start to see price just shifting lower and lower. And if we go back to my trading journal again, we can see, the overall, trading profits. And yeah, this is the trading game, guys. This is what it comes down to at the end of the day. In order for you to become a profitable trader, your main point of focus have to be yourself, right? You focusing and understanding that you are you're the edge. You are the edge, doing things that will help you overall improve your psychology, making sure when you're showing up to your trading day, overall you are prepared. You come in with a prepared mind, right? You are calm, you are relaxed, and you're keeping account of your risk, right? You're making sure that every time that you take a trade, it's worth it. The risk to reward is worth it, and your overall risk management is in place. You know, psychology, risk management are two critical aspects of trading, but focusing on the performance aspect of trading is just one big is a big deal. None of this, you know, you don't get a trade like this by just not taking trading seriously or not doing the things that you need to do in order for you to be the best possible trader. And that's the video, guys. Thanks for watching. As always, don't forget to hit that like and subscribe button, and please, on your way out, feel free to leave a comment down below. If you don't have anything to comment, simply comment "live free." You'll get a cookie for it. Always, I'm cheering for you. Hope you're out there living free. Peace.